Alright, good morning, fellas. I believe today we're gonna be talking about fib ratios, using them alongside Elliot Waves, and also going through the lot of patterns that Elliot Waves can undergo. So, if we remember from last, last time we were here, I did something like this. So we've got 5-wave impulse up, then we've got an ABC, and I said to you fellas that there's a number of different ways that the 5-wave impulse move can go up, and there's also a lot of ways that the ABC can form. Let me see how many fellas I've got. 6, nice. There's a lot of ways that the ABC can go down. So I think what we'll do is we'll go through the main ways in which the ABC can come down, after which I'll discuss the fib ratios between all the motive waves and even the waves coming down as well. Alright, so I'm just going to get out my notepad. There's a whole bunch of different ways that ABC comes down. Alright, shit. There is, if I spell it out, you've got zigzags, you've got flats, of which there are regular flats, running flats, and expanded flats. Then you've got am I lagging? I'm just gonna leave here so use less data. Oh yeah. So you've got so zigzags, flats, triangles. So that can be usually it's symmetrical, but I guess you could also apply it to ascending, descending triangles. And then you've got wedges, which are usually leading first diagonals. They're called leading first diagonals and ending fifth wave diagonals. So it's a lot. There's a lot of theory in which these things can go through. So, in the essence, we'll just start with the zigzags then. Alright, zigzags are also known as 5, 3, 5 corrections. And what that means is, you've got your 5-wave impulse move up. Right. You've got an A, B, C. And inside this ABC, you have 5 waves. 5-wave impulsive move down with a 3-wave correction, and then a 5-wave impulsive move down. So remember last week when I was saying inside of these smaller waves, you can have 5 waves on their own. The same goes with corrective waves. So pretty much within every single wave, you can expect a smaller degree of Elliot wave running inside that. So inside corrections, in a 5-wave move up, you'll have 3-wave moves down, 3-wave moves down, 3-wave moves down, of which can be a 5, 3, 5 or any of these other combinations. Now with the 5, 3, 5 down, you can which I'll talk about in a sec how we get these targets, but you can use the same way in which we used to derive these targets, so top of wave 3, top of wave 5, inside of these smaller degree trends as well. So really simple. So zigzag corrections, you want to be looking for a first move down, a corrective B that doesn't go past wave 5, that doesn't go past the origin. So usually it settles in between here somewhere, after which you'll see a low, and that low usually takes us farther than the bottom of that, but sometimes it can be weak and it just bottoms out here. So it's still considered a zigzag, it's just truncated fifth, because it shows weakness in the bears. Okay, so that's zigzags really quickly. Then you've got flats. So flats, they run this pattern. They run a 3, 3, 5. 3, 3, 5 in the ABC. And like I said, there's a few ways in which it happens. So 5-wave move up. So in ABC, for a regular flat, you do something like this. So B is similar to where the origin is, and C wave only doesn't go any farther than A, so it's kind of like this, right? And usually inside of here you have three waves down. Disregard the ABC. It should be three waves down, 3 waves up, and then 5 moves down. Something like that. That's a regular flat. Then you've got something called a running flat. These ones are really rare. Like I've hardly seen any really. But it does something like this. So you've got an A, B goes above wave 5, and then C, because it's sort of weak, it ends up above there. And then what often happens is it kind of forms like a channel, sort of thing. Something like that. It won't always be exactly like that, but it's kind of similar. And a lot of the time, C ends up above A, and B is above the end of wave 5. So this is usually really bullish retracement. But then again, I've almost never seen one of these ones. So yeah. Then we've got an A, B, C. So this is a different one. This is the expanded flat, and the reason why it's called an expanded flat is because if we take a trend line to go from the top of wave 5 to B, it looks like a megaphone. Yeah, I call this, because you know how like Bart Simpson's always been, you know, he's been plaguing Bitcoin really. Yeah, inverted Barts, upside down Barts, normal Barts, whatever. This is another one of Bart's inventions, and it's called the megaphone. A finishes around here, B extends up, and C will find its way well past A. Like, it doesn't have to be, you know, always like this, but it might just be, you know, just as long as it's either on A or below A, then that's considered an expanded flat. This one is a little bit more common than running flats. But yeah, so that's the expanded flat. Then we've got symmetrical triangles. Yeah, so the only reason why I'm going through this really quickly is because I want to get to showing you guys some examples, because I really think learning with Elliot Waves, it's best if you learn through examples. Then you've got what's called triangles, symmetrical, really simple. You know, everyone's seen the classic move up, then you notice your price starts to wedge into something like this. Usually happens at a flagpole, so everyone calls this, you know, bullish flag, bullish pennant. Classic Elliot wave as well. So we use triangle to kind of measure it, and usually follows 0 A, B, C, D. Wait a minute. Pretty sure it's this. By the way, I'll be uploading this for you guys to have a look, because these are the notes that I've made up. Yeah. So in a bullish situation, it'll be starting from the top of the flagpole, A, B, C, D, E, after which you break up to the upside. And inside these these 5 waves, it follows a 3-3-3-3-3 structure. Jesus, what the hell happened? Damn, I got stopped out last night on Ethereum as well. I got stopped out around here. Fuck, that wick up thrust. Oh well. Anyways, okay, so triangles, 3, 3, 3, 3, 3, 3. And obviously these triangles can take part in a lot of different forms, so just so I could quickly annotate it, A, B, C, A, B, C, A, B, C, A, B, C, finally an A, B, C, and once you're done with that, you'll begin your first wave, your first impulsive move up. Something like that. Yeah. And usually, to tell you what, I'll go through this during chart patterns. We can talk about this in a second, but that's right. Alright. So that's that. You can also move the trend lines a little bit to form something like an ascending triangle. So, I'm going to delete all the pinks. As long as you know there's 3 waves inside each of those, that's all good. So, something like this. Yeah. So going ABC, 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 after which breaks up. Descending triangles as well, but usually descending triangles go the other way, and symmetrical triangles usually go up in the direction of which the flagpole goes up. So if this symmetrical triangle is forming in a bull market, likely chance it'll go up. If it's forming in a bear market, likely chance that it'll go down. So symmetrical triangles are a bit of a 50-50, although I think stats have said that prices break up, if I remember correctly, like 56% of the time, and they break down 44% of the time. So that's the symmetrical triangles, really quickly done. Wedges. So wedges are really, really fun to play, I reckon. They are absolutely beautiful. So what wedges are, I'm sure everyone's talked about this, you know, falling wedge or rising wedge. Right. So in this instance, the sellers keep pushing the price down, but the buyers, they're not conceding as much as the sellers are. So I mean, if they concede at the same rate, it'll be a channel. If they're conceding more, it'll be expanded, like a megaphone kind of thing. But if they're not conceding as much, it's called a wedge. And wedges are really, really like pretty powerful reversal patterns. And what happens inside of these are, you've got leading first waves and ending fifth waves. So in leading first wave diagonals, it's usually the first wave that does it. So it's the initial wave that's formed something like this. And ending fifth wave diagonals, they usually end on something like this. So what I mean by is, so knowing the general shape of the wedge. Alright. So for instance, you could have something like this. We would all agree you can draw a trend line between the top 3 lines. You can draw a trend line between the bottom 2. That's called that's just more or less a wedge. So wedges, you'll notice that straight away that the waves aren't really right because they're all crossing over each other. And that's and in my previous video, when I was talking in the previous stream, in the previous video that I made on regular Elliot waves, I said there are exceptions to the rule in which wave 4 must not go into wave 1 territory, and it's in these situations where the rule doesn't count. I don't know why. It just so happens to be that Mr. Ralph Elliot thought that this was the way. So, we take his word for it. This is the only time, like I said, where wave overlap happens, and they usually end in either the first wave or the fifth wave. So this will be like an example of a first wave. Leading so first wave leading diagonal in a bullish sense, that is. In a ending fifth wave diagonal, you have something like this. Wave 5 will do something like that. Okay, so it's usually an extended wave 5s, and inside of this wave 5, you have something like this. So inside of this wave 5, you'll be forming another wedge. Yeah. So something like this. This is usually ending fifth wave diagonals. Like I said, this is when the final fifth wave is really extended, of which inside there are 5 waves on its own. that's usually, you know, when a really, really big extended bullish movement. And the classic example I can give for that is Ethereum Classic, which I remember I tried to trade, scalped it, lost it, because I didn't account for something like this. So a lot of the time you'll notice in rising wedges, Elliot wave count, it does something like this. 1, 2, 3, 4. This is usually, you know, this, like I said, this could be a 1, 2, 3, 4's already happened, and then boom, you've got this massive extended fifth wave. And then the same can happen the other way around as well. Same can happen the other way around as well. So if I draw out my this, so this is, we'll call this a ending fifth wave diagonal, leading first wave diagonal. So this will usually happen after a massive uptrend. For 5, this will be the A wave. For instance, inside a 535. So this could be the A, then a B, then a C. So this could be, you know, a 535. Inside of which you have 1, 2, 3, 4, 5 with an extended fifth wave. And then inside of that, what you have is this, like 1, 2, 3. Yeah, so something like this. So in your massive A wave, you've got 5 waves, and inside of which there is another 5 waves. So this will be a, I'll tell you, no, this will be more like an ending fifth wave diagonal inside of a, yeah, so this will be an ending fifth wave diagonal, but going the bearish direction. I guess a first, we're leading first. I'm not comfortable with doing leading first in the bearish sense, but it would be something like this, I guess. Yeah, I'm not, like usually I don't think I've ever seen an ending like a leading first wave going in the other direction. I've only seen it going in the bullish movement, bullish direction, but never the bearish one. So yeah, I would just say ending fifth waves and leading first waves in bullish movements. Right, so now that I've gone through all of these ones, I think it's really important that maybe we'll go through some examples and I'll discuss fib ratios. Alright, so we'll agree. Let's just say, tell you what, let's just take our most recent, yeah, let's just talk about our most recent move down. Okay, yeah, there we go. So, what are we on? Zigzags, 535. Okay. Day 1. Oh, actually, tell you what, I actually forgot out something now that I remember about it. So with zigzags, you can actually have multiple failure points. So when I was talking about the ABC, right, that is a classic zigzag, yeah. So 5, 3, 5 inside of there. But sometimes, so usually after an ABC, prices will try to attempt to break out. Usually works, but sometimes it fails. And when that fails, we call this a 0W X. Why? X denoting wave failure. So it'll do something like this. It'll do another ABC, after which it'll do another ABC down. Larger degree ABC. So it's kind of weird in that, you know, you can have wave failures in a sense, because usually you expect after the wave down, after the original ABC, you'll have breakout. At least you're having a 3-wave attempt to break out, and if we fail on the 3rd wave, after which you'll have another 3 waves down, which forms another ABC. And then sometimes, because prices can be so bearish, like extremely bearish, you can actually have you can have a Elliot triple combo wave. So we have a W, X, Y, prices will try to break out once again, fail, and then we'll do another ABC. By this time, prices, volume will be absolutely gone through the, volume would have fallen right off the planet of the Earth. There will almost be nothing down here, and after which you can almost guarantee to yourself that there's going to be a breakout. just trying to apply this to Bitcoin right now, seeing how it works. Tell you what. Let's try and map this. Alright, let's try and map this. Because I reckon this is doable. Alright, so this will probably be something like a really complicated zigzag correction down. I'm going to chuck it on the weekly to see if that makes it clearer or make it any easier. I'm not liking it. I'm going to put it on the daily. Alright, so I've got a bit more clarity, a bit more data to go through on the daily. So we'll go. Let's do this then. Okay, so I think we established last time that there was actually a 1 and a 2 that was before here. So 1 took us to like $90 or something. So we started at like $1, took us to like $90. That was our first parabolic move up. Then we flattened out. This is 3. That's 4. This is the start of our 5, of which there's 5 waves inside of here. So a really, really extended 5th wave. So that's 5 moves up. And after which we had massive, massive, massive correction. So let's do this. Okay, so inside of here, I can count 5 waves. 1, 2, 3, 4, 5. Yeah, look, I don't see it forming a wedge of any sort. So let me draw some trend lines in so we can see it. Oh, sort of. Yeah, we formed a sort of a wedge. So we could say that this was a lead ending 5th wave diagonal. So something like this. So there's 5 waves inside here, so this forms the first A. I can see that we topped out here in a 3-wave fashion. 1, 2, 3, 4, 5, 5, 0, then another 5, so 5, 3, 5, A. Then we're forming a B, which probably... So let's count 5. 1, 2... Well, this is a really massive 1, 2, 3, and 2, 3, 4, 5. 1, 2, 3, 1, 2, 3, 4, 5. So 1, 2, 3, 4, 5. So 5, 3, 1, 2, 3, 4, 5 with an extended 5th wave. So 5, 3, 5. I'm gonna take the candles just as reference. I think we should use candles, not the wicks in this case. Because look at this. We worked down to 385 from. So we worked down to like what 500 from a close of 900. So maybe we'll just ignore wicks for now. So A, B, C, X failure here, because we try to break up. After the ABC we try to break up, we failed. Inside here we... Oh, actually, 1, 2, 3, 4. No, that's not right. Scrolling out, we can actually put a 1 with 5 waves inside, 2 with another 5 waves inside here, 3, 4, 1, 2, 3, 4, 5, extended 5th down here, boom, there we go. So that's the original ABC. Then we had a 3-wave ABC, so 3-wave up, and then 1, 2, 1, 2, 3, 4, 5, 3, 4, 1, 2, 3, 4, 5. Yep. So 5 waves inside here. 1, 2, 3, 4, 5. Yep. So that's the first A. B. 1, 2, 3 waves up, of which there's 5 waves inside. So 1, 2, 3, 4, 5 with a 5 wave extended. Yeah, that's alright. So in the end, what this formed, so Bitcoin back in 2014, alright, just from a really, really quick analysis, formed a double Elliot wave combo. So that's the start there, 0. So W ends at the first 3, so at the first ABC. So we've got an A, B, C, so it ends down here. X wave, because we tried to break out, but we failed. And then we formed another 5, 3, 5 waves down, movements down all the way to there. So we made a nice A, B, C. Oh, that's the thing with Elliot waves. It can get really, really, really complicated, and like this complication can, you know, scare a lot of people away. So after this correction, we did a little bit of sideways movement. We can probably call this some sort of maybe the start of a wave here with a retest and there, and then after which we just marked up. So it could be something like that. So that'll be a classic 5, 3, 5. And then in order to derive these targets, so there's a lot of targets inside here. I'm gonna bring us to, say, a coin that we all really like. Tell you what, we should go through the theory first. Okay. 5 waves up. Alright, so in order to get a target 2, in order to guess, to see where target 2 should end, what you do is you take a fib retrace. Alright, so Mr. Ralph Elliot thought, oh, you know, drawing lines by themselves, it's kind of arbitrary. But if you use it with, if you integrate it with fib ratios, with fib theory, it becomes a lot more apparent. So you take the fib from right at the bottom, so right at the bottom of where the origin of the wave is. That's including the wick. Draw it up to the top of the wave 1, and then you project a wave 2. So so when wave 2 corrects, usually it settles in between the 0.5 and the 0.62, or in our case the 0.618. So this is why a lot of people, myself included, we like to eye the 0.618 region for a wave 2 correction target. And the way in which it reaches that target could be an ABC, could be a running flat, or whatever. After which you'll have a few waves up. And then in order to get a wave 4 target, what you do is you take the bottom of wave 2, draw that up to the top of wave 3, and see where wave 4 finishes. Usually, we want to see us finishing between 0.236, 0.382. So something like that. Now, as long as wave 4 body of the candle does not exceed past the top of wave 1, so something like, you know, a really deep retrace, could be a 618, could be a 786, depending on the extension of wave 3. As long as it doesn't exceed the top of wave 1, it's valid. But all I'm saying is, most of the time, it'll form a correction inside here like that. Now, sometimes, right, say this does this. If wave 1 only corrects very, very mildly, you know, to 0.382 or something, then wave 3 will correct a lot. And what I mean a lot is, it'll probably do something like this, to the 0.5, maybe to the 0.5, to 0.618. So how do you know that it'll do this then? So I created this formula of sorts. I created this formula of sorts. So in order to get a wave 4 target, or wave 1 target, 1 minus wave 2 retracement ratio is equal to is equal to a likely wave 4 retracement. So what I mean that is, so say, you know, wave 1 retraces to 0.382. Oh, I'm just streaming to myself. What the hell? Oh, that's shit. Oh well. Oh well, I guess I'm streaming to myself, so guess no one's really interested. Tell you what, I'll still finish off the stream, the recording, because I said that I'd fucking do it. But oh well. If wave 1 retraces to 0.382, okay, so if wave 1 retraces to the 0.382, what you do is you do 1 minus 0.382 is equal to 0.618. So that is the likely retrace target for wave 4, 0.618. Now if wave 1 retraced, let's say 0.618, then wave 4 will likely retrace to 0.382. That's just how it works. It's like a bit of a seesaw kind of thing. If this one retraces a lot, this one doesn't retrace a lot. If this one retraces a lot, retraces very little, then this one retraces a lot. Something like that. And then by that same token, if wave 1 retraces about to the 0.5, wave 3 will also retrace about 0.5 as well. Simple as that. Alright. Now, when you're talking about a wave right retrace, their first thought will be, alright, sick. Let me just go to the bottom of wave 4, take that up to wave 5 and do a retracement like this, you know, and just go for some sort of tuck inside there. Well, I'd hate to tell you, but you're fucking wrong. You don't ever do that. Don't ever do that, or else you get fucked. What you want to do is, you want to take the value of the entire 5-wave structure up, draw your fibs up to the top, and then depending on which cycle this entire wave is in, if it's in the 618 or the 382, in the first wave or the third wave, it'll either retrace to 618 if it's in the first one. It's likely to retrace to 618 if it's the first entire wave move up, or 382 if it's the third move up. Now we'll go through some examples, real life, just to show that it is true. So Bitcoin right here, we'll just take our most recent rally up. Yeah, most recent rally up. So I'm going to go on a shorter time frame. Alright, so I'm sure you guys already know this is my primary wave count, 1, 2, 3, 4, 5, with a really weak fifth wave up and a really strong first wave and a third wave. Okay, yeah, so this is my primary wave up. I'm gonna put it to a really high cycle degree, remove the wave so you guys can see. Something like that. Alright. Inside of the first wave, you've got a leading first wave diagonal. So I can see something like this, perhaps a 1, 2, 3, 4. This is a 5. So of which there's 1, 2, 5, 1, 2, 1, 2, 3, 4, 5. Oh no, hold on. Yeah, let's take this as the wave 1s and 2s. So that's wave 1, 2, 3, 4. 1, 2, 3, 4, 5, 1, 2. Yeah, this needs to be off top of this needs to be a 5, somewhere like that. Yeah, I don't know. I mean, this place was where manipulation was absolutely rampant. I know this is a really weak case. I'm sure I can clarify it. Bottoming out at 1, 2, 3, 4, 5. 1, 2, 3. Yeah. Look, this is really weak, but I'll have to do something like this, because this is the one that makes the most sense to me. 1, 2, 3, 4, 5. 1, 2, 3. 1, 2, 3. 1, 2, 3, 4. Yeah, so something like this. So this would be like a leading first wave diagonal. So sort of like a rising wedge kind of thing. Remember, rising wedges, they form in the final move up. So inside of the fifth wave, of which there are 5 waves on its own, that's where the rising wedge starts. Okay. So inside of this fifth wave, you've got something like this. 1, 2, 3, 4. A lot of wicks, but I allow wicks going into the bodies of as long as the candle close does not go below 5. Alright, so that's sort of like a wedge, after which we correct. correct down. So usually what follows a wedge is just a simple correction. It's not like, oh, this is the start of a downtrend. What happens afterwards is usually a correction, and that does not mean the start of a down or start of a reversal. Yeah. Oh, hold on. No. So rising wedges. Yeah, it doesn't mean that we're going to be straight away bearish. Doesn't mean that we're going to start a downtrend. Usually, what happens is a correction. So I got liquid. So I wouldn't say I got liquidated. So I made a nice short play down here. I remember, but I held on to my short because I kept thinking, oh, we're going to go down. But I guess I just got baited. I got baited pretty heavily. Anyway, so that's the first wave. First wave. 1, 2, 3, 4, 5. So I already got those drawn out. So we'll talk about the third wave now. So this we can say is the third wave. So something like this. 2, 3, 4, 5, 3, 4, 5. Yeah, something really, really, really simple, just like this. Now, going back to the rules that I talked about earlier. Alright, so going back to the rules that I talked about earlier. Remember that wave 1 is cool to retrace about to the 61.8. And guess what? We wicked just past the 61.8, but it was a touch. It was a perfect touch. There we go. Right there onto the 61.8. That goes down there. After which, inside there, of which there are 5 waves. We can do something like 1, 2, 3, 2, 3, 4, 5, which is ABC down. So something like that. So 5 waves down, like that. Yeah, hold on. Yeah. So actually drawing it correctly to the top of this wick there, we'll see that the wave literally hits the 61.8. Maybe just misses it just by a tiny weeny bit, literally by a hair. Right, so we can say that. So that's the end of wave 1, 61.8. So this is why I think this is a really, really strong wave count. 61.8. Okay. That's wave 1. Wave 2. Wave 2. There are 5 waves inside here with a really extended first wave, which is quite rare in and of itself. We're gonna take this because honestly, this was just shorts being liquidated. So that's not exactly organic price growth. So we'll do something like this. So 1, 2, 3, 4. I'm sure there's 5 waves inside here. After which there's an ABC. Oh, hold on. We can actually talk about this retrace here. But yeah, so we've got a 1, 2, 3, 4, 5, and again, guess what this formed? This formed a wedge, which is why a lot of people at the time was shorting this. I can't remember. It must have been something like this, but I do remember there was a wedge somewhere in here, or maybe the wedge was up there. I'm not sure. But yeah, so that's the wave 2, and then if we have a look here, so the wave 4 correction ended here. Alright, so ended around here. I'm going to delete the first one. We'll just take, I'm just going to make a note here. Wave 1 retraced just to the 61.8. Taking the bottom of wave 2 all the way up to wave 3. So this is a wave 3. We retraced quite bullishly actually, only to the 0.236. But do remember that because the first wave retraced a fair amount, what 0.618, I wasn't looking for something that for a major retrace for this wave. Like as far low as it will go, I thought was about 7,600. But it was extremely bullish, retraced to 0.236, bounced off it twice actually, And you also notice a lot of the time that these fib numbers, these fib ratios, they're actually zones of quite strong, quite strong resistance. So so the numbers that I've got here, 236, 3825, 618, 782, and 88, these are really, really, really important numbers, right? So yeah, so wave 3 corrected up to there. Then we had wave 5, which was quite weak. And afterwards, look, if I was just like any other wave trader and I took the bottom of wave 5, pulled it up all the way to the top, right, I would have expected a retrace somewhere around here, and that's it, and afterwards would go up. Well, guess what? No, guess what happened afterwards? We broke all the way down. That's no good. And what happens when you break it all down? That's because they took the wave count wrong. So what they should have done was they should have taken the bottom of here all the way up to the top here to see where we retraced. Now this is an extremely bullish retrace. It went just past the 236, didn't quite touch 302, but we do need to notice that sometimes these wave ratios, it's dependent on, you know, where the supports and resistance are. So we could say that this at the bottom, this is probably as low as it will go because there's a lot of wicking over here. But because we'd already penetrated into this massive zone of support, it bounced off right here, which was also zones of support around here as well. So formed the head and shoulders, proceeded to go up. So we retraced. Remember, so we'll just say between 236 to 382. But closer towards 382. So I'm gonna say something like this: wave 2 retraced around 0.33 between the 0.336 and 0.382 region. Alright, something like that. Then we had the third wave up, and the reason why I thought this was the third wave is because we formed a very special sort of correction here, which is very similar to what we had inside here. So if we look around here, so this is a simple AB zigzag correction down of the 5-wave movement. So we've got something like A, B, C with a really extended C wave. A, B, C, 3 waves down. In here, this is the regular flat that I was talking about. A regular flat correction. A, B, C. Right. I mean, you can argue that it's more like a zigzag with a truncated C, but I mean, it looks more like a flat to me. I remember these rules aren't exactly set in stone, and that's one of the bad things about early wave is that there can be a lot of rule bending. Like I've adapted these rules to kind of suit my style of trading, but yeah. So this would be like a really simple flat correction, and then we proceed to have our final. This is our wave 3 up. I'm gonna just draw out the waves inside of here. So it'll be like a 1, 2, 3. So probably like a 1, 2, 1, 2, 1, 2. 1, 2, 3, 4, 5. So 3, 4, 5. So this will be a 3, 4, 5. All of that forming a wave 1. Oh, hold on. 1, 2. 1, 2, 3, 4, 5. Oh, so this could actually be a massive wave 3. Wave 4. Hold on. 1, 2. 2, 3, 4, 5. 1, 2, 3, 4, 5. So this would be like a 1, 2, 3, 4, 5. So hold on. So 3 ends there, 4 ends here, 5 ends there. 3 ends here. So this is a really extended third wave. And now if I'm going to clear all the vibration from before. So if we have a look at now this wave count, the fib retracement. So from the bottom of there, take it to the top. We retraced below the 618, so we wick down below it, but we almost touch the 786. So these are the really important numbers that I talk about, you know, because a lot of the time prices like to bounce off these zones. So bounce down to the 786. After which we had a massive 1, 2, 3, 4, 5, 3 waves up, and I'm going to take the retrace of that, and I guarantee because this traced a lot, this will probably be like a 2, 3, 6. Some really bullish retrace. So down there. All the way up to the top here. Boom. There we go. Very bullish retrace. Touch the 382. Just. A lot of confluence around the 236. So like I said, these fib ratios are usually zones of quite strong resistance or supports. 0.5. Look at that. All that support over here. 0.326. Right at the top. Right at the tops of these supports. 0.618. Right at the bottom of these wicks over here, and the top of these wicks. 236. There we go. Look, some support there, support there, support there. Some resistance there. So these fib ratios, they usually mean they are quite significant because they do they are significant in that they usually correlate with zones of supports. So you can use this alongside horizontal resistances and supports to kind of help you decide on where you want to make your trades. So that's that. And this formed a really nice, again, a flat correction. So 3. I don't know, man. This is really messy. I'm gonna bring it up on a higher time frame to see if it clears that up a little bit. One, two, three, 1, 2, 3. Yeah, okay. We can do something like this. ABC, of which this is a 1, 2, 3 in and of itself. So ABC, expand a flat of its own. ABC inside there, ABC. So yeah, another regular flat here, ABC. After which we have a 1, 2, 3, 4, 5 up. So again, really recognizing patterns, using fib ratios, fib retracements to kind of help you decide as to where prices will retrace to is quite helpful, really. And then at the end of all this, we have an entire 5-way retrace of the entire structure. So something like this. Now remember, the retracement here of this movement up was just below it was around the 3233, so around the 236382 region. Now using my formula, 1 minus the x being the retracement of wave 1, so it gives us around a 618 sort of ish target of wave, it's about 6867 target of wave 1, of the next wave. And guess what? We didn't quite hit the 618, but we did have a more deeper retracement than this. So the law still holds in that if you have a really bullish retrace in one of the waves, the next wave that follows will be a deeper retrace, and we definitely retrace a lot more, down to 0.5, wicking almost down to 0.618. Yeah, down to the 0.618. Now, inside here, you can argue two cases. You can either argue a flat, which is what I've been saying, which is what I've been talking about before. Not really a flat, but so something like this. You can argue that's a flat, but I'm inclined to think it's a zigzag, 535 zigzag, with a really truncated C wave. So really weakness in this. So we've got 1, 2, 3, 4, 5. 1, 2, 3, 3 movements of which there's 5 inside. 5, 3, 5. So 1, 2, hold on. 1, 2, 3, 4, 5. 3 moves down. 1, 2, 3, 4, 5. There we go. 1, 2, 3, 4, 5 down. So forming some sort of either a symmetrical triangle into a zigzag, or polysymmetrical triangle into a zigzag. Now with all these patterns that I talked about before, you can actually have a whole bunch of them connecting together. So in this case we had an ABC, nice ABC, and after which proceeded to do a 1, 2, 3, 4, 5 up. Alright, so if we zoom back all the way down here, okay. So in this move, this was Bitcoin. we probably had a, so this is probably a 5, 1, 2, 3, A, B, C. Massive A, B, C. Massive, massive, massive. Inside of this A, B, C, we've got original 5 waves. So this is like a 1, 2, 3, 4, 5, 1, 2, 3. So 1, 2, 1, A, so some sort of zigzag inside here. Yeah, forming a wedge, after which we broke out. And then straight away we move into a triangle. I spot a triangle straight away. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. A, B, C, D, E. And then, A, B, C, D, and then we break out on E. Don't really... Tell you what, this is probably more like a really complicated A, B, C. Yeah, this is probably more like a B, C. After which we had a 1, 2, 3, 4, 5. So 5, 3, 5. And then straight away, if I look back, we also notice that this is a massive C. This is a massive triangle. A, B, C, D, E. Perfect. So in this A, B, C, D, E, we see 3. 1, 2, 3, sort of. 1, 1, 2, 3, 4, 5. If I have a look at different time frames, I wonder what that says. One, two, three. Ah, yeah, looks a lot more clearer this way. A, B, C. Complicated A, B, C. Sort of through it. Yeah, A, B, C. 3 waves down. A, B, C. And then A, B, all of this is a C. So A, B, C. After which we broke down. So you can have zigzags. So this is a zigzag followed into a symmetrical triangle, which also acts as retracement for the entire 3 move down into another zigzag. So you can have multiple combinations after another. You can even have a zigzag into a flat, into another zigzag, or a zigzag descending triangle into another zigzag. So it's pretty cool how Elliot Wave can kind of connect all these different patterns together. So we'll go back to this. Wave 1 retrace to 618, 2 to that. 3 was a 0.5 retrace, after which we had a wave 5, and now if you had just been looking at the fib ratios here, just like this, you would have thought, okay, yeah, I mean, 618 would have been a nice time zone to buy, but no, if you bought 618, look at that, you entered around here, boom, you're at a pretty hefty loss at the moment. So which is why it's really, 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 really important that after an entire 5 move structure up, once you've established the count, you take the retracement from the bottom all the way up to the top. All the way up to the top. Right. And because this is a wave 1, I am waiting for something like this. 618 retrace. If not, I mean this is still pretty good retracements. 0.5 just below above the 618. This is a very good retracement. But it's not how do I say? It's not set in stone. Like these are likely zones. These are likely zones of bounce, but sometimes prices don't really go down. So if we went into detail, the retracement that we went through here, I can see something like this: 1, 2, 3, 4 with an extended fifth. So 1, 2, 3, 4, 5, and so with an extended fifth, and in that extended fifth we formed falling wedge. I think this was one of the plays that I made, that I decided to play. So I longed around here because I started noticing divergences, and then broke up, sold around there. After which, it was very, very, very low volume rally up there. So as you can see by all those wicks, so I thought, we're probably going to do another downwards movement. So I know this looks like 1, 2, 3, 4, 5. 1, 2, 3. There we go. On a higher time frame, it becomes clearer that it's probably a ABC. truncated C. After which we had huge. This is another ABC in and of its own. So if again go onto a lower time frame. 1, 2, 3, 1, 2, 3, 4, 5. 1, 2, 3, 4. Yeah, I had a bit of trouble actually trying to figure out the count of this one. 1, 2, 3, 4. 1, 2, 1, 2, 3, 4, 5. 1, 2, 3. 4, 5 maybe. BC. Let's go on those hourly time frame to see what this is. 1, 2, 3, 4. 1, 2, 3, 4, 5. 1, 1, 2, 3. So 1, 2, 3, 4, 5. Yeah, I'm probably gonna take something like this. So 1, 2, 1, 2, 3, 4, 5. I'll squeeze a 5th in there. So 1, 2, 3, 4, 5. Something like that. Something. Oh, actually, hold on. We can do this. 1, 2, 1, 2, 3, 4, 5. 1, 2, 3, 4. 1, 2, 3. Oh, nah. This does. Yeah, this breaks it. It's got to be in there somewhere. We'll have to take it as that. Take it in there somewhere. After which, this forms are really complicated. By the way, this was manipulated to hell. This was not organic in the sense there was barts here, barts there, barts there, barts here. It was absolutely crazy. So this was manipulation, and once it's being manipulated, it's very hard to chart. So I can see some sort of general A, B, C, something like that, something of the sort like that. After which we have a 1, 2, 3, 4, 5. So something like this. 1, 2, 3, 4, 5. 5, 1, 2, 3. Again, ABC. 1, 2, 3. Of which there's 3, 3, 3. 1, 2. You can argue this is a 3, 4, and a 5. Going to lower time from double check. Yeah, we can say that. So something like a 1, 2, 3, 4, 5. Now the problem that I've got with this is that there's a lot, like the count doesn't really work. So this is a 3, 3, 1, 2, 3, 5. 3, 3, 5. It usually says that's a flat. And this clearly is not a flat. This is a zigzag. So yeah, I mean it's not perfect, but it'll have to do. After which we broke out 5, 5, 3, 5. Yeah, I mean this looks pretty bullish actually. Just price action wise, looks really bullish. Okay. Anyways, so yeah, that's the most recent count. And now, how do you derive a lot of these targets? You know, how do we know how far this goes? How do you know why do people give you a target of this? You know, or maybe why do people know that there should be like a bounce happening around 8,400 or something like that? Well, this is how they find out. They use Fib extensions. So when I'm doing a 5-wave impulse move up, so something like this, 1, 2, 3, 4, 5. I apply Fib extensions to get target 3 and target 5. Now there's a whole bunch of different ways, but the general rule that I use is to get target 3, I want a 1-to-1. To get target 5, I want a 1.618. Now you can have stuff like this. You can have stuff like this. I'll link a resource, the resource that I use to help me derive the targets. It's beautiful source of beautiful resource that I've got. But yeah, so usually we want to target 1-to-1 extensions for a wave 3. We want to target 1.618 for a wave 5, or just a little bit above. That works as well. And the same way goes for corrections as well. So let's just take a look at this. Yeah, I mean, 1.618 extensions are pretty common as well. So we wick down past 1.618. found a lot of confluence around there, bounced off the 1.618, found some resistance at the 2.618, bounced off that, broke through it again, found some support at the 3.618, of which we bounced up again. So there's a lot of these fib extension ratio, or these fib extension numbers, they're really, really important because they usually find zones of resistance against the trend. And then in order to, the same can be applied down here. And by the way, there's also another thing. So you know how I talked about drawing fib retracements on motif waves? You can do the same thing up here as well. So here we retrace to 0.88. This is why I love using 0.88, because it's a really, really common algo target. Algo target meaning a lot of algorithms traders, so they love to use the target. So that was 0.88 retrace. I'm not expecting this to be any more than 0.382. It went a little bit past 382. Yeah, but that's still alright. So that's what, 0.382 retrace. After which we continue to go down. So you can use fib retracements going up or down as long as you take it from the point of origin and close it at the point of close. And when I'm taking fib extensions, what I do is, it's this tool by the way, it's inside here, fib, trend-based fib extension. You put it at the start of the wave. So at wave 1, you put it at the origin of wave 1, take it to the top of wave 1, close it at the top of wave 2, to bring it back, and you have something like this. And if I was going the other way around, so close it. Start at wave 0 at the start of wave 1. First touch at the close at the end of wave 1. Target wave 2. So something like this. 1, 2, 3, 4, 5. We could do something like that. Yeah. So that's that. Now, there are a few numbers that I like to keep an eye on when I'm using trend-based extensions, because you can also use the same idea on retracements as also on the ABCs. So you can do something like this. So because we know this is a 535, this is a zigzag correction, 535. You can actually take a fib extension from the top of wave A or 0, take it to the bottom of wave A, pull it back to B, and give yourself a fib extension target. So pulling back here, I would have, you know that the tops are around here. You know that we're on the downtrend. So what you do is you short around here, thinking, I know we're starting a new trend. I want to know how far down we can go. And boom, 8400. You also remember back in the day, back at the time, a lot of people are calling for 8400 bounce. Like so many people saying, oh, we'll go down to 8400. Some people are going, 8200 because these are zones, these are horizontal zones of really, really strong support, and they're absolutely correct as well. But crucially, I use this fib ratio 1.236 alongside all the other ones. Obviously, 1.0 is really, really important. 1.61 is also really, really important. But 1.236 sometimes happens as well. So, yeah, for me, if I was shorting this, A, B, I didn't play this out because, I didn't play it out just because I didn't feel like playing it out. Because I think I felt like I just wanted to go long. Anyways, so 1, 2, 3, 5. On any pullback, I would have started to short because I know now that we've started this, I'm waiting to see 5 waves down, and I would have closed around the 8400 because that would be a 1-to-1 extension of this wave. So 1-to-1 extension pretty much means that the C wave is about the same length as the first wave. That's what the extensions mean. And if it's like 1.382, it means that the C wave is 1.382 times longer than the A wave. So something like that. Same targets can be derived from here as well. Top of there, bottom of that, take it to the top of C. Now, because this was a really, really weak bearish movement, and this often happens on the second WXY. Oh, sorry, on the after the failure wave. So this could do some sort of really this could do some sort of I think we double wave combos. So W, A, B, C finished. W. This is our failure wave, X, and then Y. So usually in Ys, I did talk about before how they're usually weaker than the first bit. So the extension I'm expecting wouldn't be as deep. So 618 would have been a very, very good target for me to close my short if I decided to short here. 618 would have been nice. So I would be eyeing 618 or 786 for in WXY for the C wave extension. So yeah, there's a few ways to look at it. If you're looking at C wave extensions in zigzags, you target 1.0, that should be your main target, or 618. So 618, 786, 1.0, those are usually good targets to aim for. Otherwise, I wouldn't bother as well. Now, in flat waves, in expanded flats. Alright, so 1, 2, 3, 4, 5. Flats. I know I haven't showed you guys exact flat yet, but if you, when you guys do come across something like this, you want to take extension from the top of the so start of the A wave, take it out to the bottom of the A wave, pull back to the B, and target a 1.121 for a flat short target. That'll be your target for the C wave. In the running flat, something like this will happen. You can still target a 1-to-1 because B retraced a lot, but usually C wave is in tandem with the A wave. So 1-to-1. That is what a running flat should be. Expanded flat could be A, and then usually in expanded flats, if I've spotted the expanded flat pattern, what I'll do is I'll target a 1.618 because expanded flats usually go past their past the origin of which they past the bottom of A. So we'll do something like this. So start at 0, take it to A, pull back to B, aim for 1.618, something like that. So that'll be expanded flat target. Right, so I think I've pretty much covered all I need to cover today for Fibs. So I'll upload some information on all that, but I think I went into a fair amount of detail as to how far we should do all this stuff. Oh yeah, sorry, I should also probably mention that, by the way, you can also do fib retracements. Fib retracements of impulsive moves down. So what? This did a 382 retrace. This one did a almost a 618 retrace. We'll just say about 0.5 retrace. So a lot of the rules that I stated going up also can be used while going down as well. Yeah. So you can use a lot of this stuff alongside horizontal resistances. Just use this kind of theory. You can use Elliot Wave theory alongside other strategies like trend lines, like horizontal supports and resistances, to help you find zones of confluence. So when I was talking to a couple of people, they asked me, oh, where we're going to bounce. I said very likely bounce target is 7800. Right, 7800. I think I posted to this bloke how we had so many different extensions coming down, going away, and so many of them were pointing at this number. And because I think, this is a conspiracy theory, but I think because so many of the figures were pointing at this number, at 7800, that I feel like what the market manipulators did was they hastened the C wave, because on the 2 hourly, right, this would have been an A, B, C, right? This, I mean, I count 1, 2, 3. I mean, you can make the case that that this is a 3, this is the 4, this is the 5. But to be honest, I'm not really comfortable. So that's why I think this may have been manipulated by the market manipulators to some degree, because everyone saw 7800 as a target. So a lot of people would have opened up shorts or sell orders for them to buy up. So just a conspiracy theory, but that's what I think. I mean, we did very well considering that we almost got down to the 618. And I think I was telling people, you start opening up your buys just below 8,000 all the way down to about 7,800. Like, that'll be a really reasonable buy zone. And I mean, we wicked into there. Yeah. But after here, I was expecting this to be, a 1, 2, 3, 4, after which we go down, but clearly not, because now this is a new impulse wave up. Although volume has been absolutely disgusting, so I'm not sure that we could be forming a triple Elliot combo wave, with this being a 3rd failure point, after which we should see us go into 7800. But if there is a failure point here, we might even go as far down as down here, down even to this. So that's like what, 74, 7500. So yeah, right now I'm on the fence really. I'm not going to play this until I see a lot more confirmation, but I do believe the next proper move should be going up. So I'll wait to see this hold. I mean, it's 1, 2, 3, 4, 5. So it already looks like an impulse wave and not like a fairly wave, because fairly waves are usually 3 waves in nature. So yeah, I'll say I'm bullish. I'll say I'm bullish for now. But yeah, I think I'll wrap it up. Well, thank you for those, I don't know, 2 people who tuned in for the first 10 minutes. Afterwards they all fucked off. So, oh well, you know, it happens. But I mean, look, the showing wasn't great last time. Showing wasn't great this time. Maybe you guys can tell me which time of the day you guys are busy. Otherwise, I mean, if no one's gonna be listening to these streams, I don't see a need for me to be streaming them. You know. So maybe I'll post up a poll or two in the seminar room, and we'll see how we go from there. Cheers, fellas.